can reap huge rewards for them. When trading Bitcoin versus something like a boring FX pair, the volatility enables us to scalp easier. Small intraday price movements. I'll leave the timestamps for each strategy in the description if you need to rewatch it, and if you need help with. Let's get right into the first trading strategy, which is an EMA strategy. But first, if you do want to use any of the trading tools and systems that I'm using in this video, simply go to moneyzg.co/tools. On that page, you will find the best trading tools, offers, and deals. So definitely check it out if you want. Let's get right into the EMA strategy. EMA stands for exponential moving average. And right now you can see I've got the Bitcoin chart against US dollar. And right now we have absolutely no indicators on here whatsoever. With our EMA strategy though, we want to use 3 different EMAs, the 3, the 6, and the 9 period EMA together. Because we're scalping, this is a really short-term chart that we're using. So you can either use the 3-minute or the 5-minute chart. You can change these depending on your preference, but really what we want to do is look for a crossover of the 3 period EMA through the 6 and 9 period. Without going too much into exponential moving averages, essentially the shorter time period, this will track the price more closely, and then the longer the time period that you're looking at, that will smooth out price movements. So essentially what we're doing here is looking for an indicator to tell us what the ultra short-term price is doing compared to the longer price. And then we can hopefully use that to anticipate a move before it happens and then get in and place our trades. So then firstly on Binance right now, I'm going to change this to a 5-minute chart right here so we can see exactly what's happening over 5 minutes. And then I'm going to choose 3 technical indicators, type in EMA and it should come up. You can see moving average exponential. So click on that 3 times because I want to add these 3 EMAs. Then we can go over to the format option and change it. This one is actually 9 period already. You can see the length is 9, so we won't change that. You can change the style to suit you, changing the color and also the opacity. Do that for all of these, but important to know is that you can change the timescale just by going to format, going to inputs, and then changing the length. So remember, it's a 3, 6, and a 9 period EMA. So what we want to do is look for the 3 period EMA, the shortest EMA. You can see that on the chart right here as yellow. We want this to cross through both the 6 and the 9, and that will tell us that the short-term price movement is possibly changing. You can see that right here during this dip. What we can see is that the 3 period EMA is actually below the other 2, meaning that we're in a slight downtrend, and that is certainly happening. We want to wait for this movement right here. You can see the yellow line, the 3 period EMA moving up through both the 6 and 9, and that is telling us that that trend is reversing and that the short-term price movement is to the upside. We also get a massive bullish candle right here, which is a great entry trigger, but really it is the EMA that we're looking for. When it moves through to the upside, that is when we go long. So either on this green candlestick or on this red candlestick right here, we can enter a long position. When you enter a long position, you can obviously put that in at a certain price that you get. And then with your stop loss, you want to look for a certain set amount of stop loss. Remember, this is day trading and scalping right now, so we're not looking to be a hero. Maybe put the stop loss around 0.5%, 1%, something you're comfortable with. In this instance, you can actually see a level of support down here. And so I'm comfortable putting that stop loss at around 0.6 or 0.7. In terms of the take profit, again, this is up to you, but a risk reward ratio of about 1.5, 1.25, something like that would be a decent risk reward for a very short-term trade. Of course, you can use this on the opposite side as well. You can see right here that the yellow line is actually above the other 2, but we're coming into some selling pressure with these red candles. You can initiate a trade when the crossover happens, and then do exactly the same to the short side. So if you do want to short and you want to use futures to go ahead and short Bitcoin, you can do that with a stop loss around 0.6% and then a take profit around 1.25, 1.5, or even 2 times more than that. This doesn't work out every time, but you can see that the yellow line, the very short EMA, really does work to tell us what the short-term trade is going to do potentially. If you're scalping, this is a great way to start and really understand how the market is moving short term in comparison to the longer term. And to be honest, a 3 period EMA is really telling us what orders are coming into the market. We want to see that so we can trade off the back of it and enter those trades accordingly. The next scalping strategy to use, coming up a little bit in difficulty, is the stochastic oscillator. Once more, I'm not going to go too much in detail into what the stochastic does, but essentially it is a range indicator and it can show us momentum in the trade. Actually, the stochastic takes a lot of the guesswork out of it. So what we want to do with this strategy is to use the stochastic oscillator as an entry trigger. What you can do is go long when the SO is at the bottom of its range and a bullish crossover occurs. That is taking a lot of the guesswork out of our trading for us just by using this indicator. When do we trade out? When the stochastic oscillator is at the top of the range and a bearish crossover occurs. What it's essentially telling us is that, hey, this might be a good time to get in when it's at the bottom of its range. When it's at the top of its range, the move may be coming to an end and so you may want to get out. Doesn't work every time, but it's a fairly simple indicator that we can use, and you can use both the 50 and 200 period moving averages as extra confirmation and some extra information that we need. For example, if the price is above the 50 period, it's telling us that the short-term trend is bullish, and so that may be good for us to go long and try and ride that trend. So back on the chart, I'm going to use a 5-minute chart once more, and you can see all of the indicators have been removed. Come to your indicators right here and then just type in stochastic, and we're going to choose stochastic right here. You can see it comes up at the bottom of the chart now. I've changed around all the styles to make it easier to see. You can do that to your preference. In terms of inputs though, you can see the length 14, smooth K1 and smooth D3. You can leave these as normal. What we want to see right now is the yellow line right here. This is known as the K line. This is our signal line and we want to watch this one. There is also a red line down here as well, and what we want to do is watch for the yellow line passing through the red line in a bullish fashion. What is a bullish fashion? You can see right here, down at the bottom of the range around 25. This is considered the bearish portion, so we want to see the yellow line moving up in a bullish fashion, up into the mid and higher range of this stochastic. We can trade when this happens then. So right here, the stochastic is giving us an indication right here, the yellow K line moving through the red line, and that is when we can go in as well. It just so happens that the move did occur, it moved up right now, and we would have made profit on this trade as you can see. When do you get out though? Well, there are different ways of getting out. Firstly, we can use it exactly the same as the first trade that we did. So putting in an entry point, maybe an amount that you're capable of losing, 0.7%, and then a couple of percent on the upside, having that good risk reward ratio. Another way though, like I showed you right here, is to wait until the stochastic is at the top of its range, telling us that the move may be coming to an end. And you can see that on the chart, there is some bearish crossovers from the upper portion moving down into the lower portion. So that would be our time to get out around this level. On the chart, that would be around here. So that would be the move getting in when we get that bullish crossover and then coming out when we get that bearish crossover. You can see there are many times on the chart that it happens, moving from bearish areas into bullish areas. It's a fairly simple strategy to follow, moving with trends. It doesn't work every time, but using an indicator like this is a fairly simple way to go ahead and actually get some entry triggers and start trading. The third scalping strategy employs Williams fractals. This one is a little bit more complex for sure than the other two. However, all we have to do is implement the indicators, know how to trade them, and then we can go ahead and implement this strategy in a systematic way. Firstly, we come to the chart. So a 1 to 5 minute chart is fine here. I'm going to use the 5 minute chart once more, but again, you can choose the timescale that you like best. Now what we have to do is implement both the 20 and 50 period moving averages, and these are going to be the trend that we're going to look at. So come to your technical indicators, type in EMA. We're going to use exponential moving averages like we did in the first strategy. We're going to use 2 of these, so click it twice and then change the formats to suit both your style and the inputs. Remember, we need a 20, so change that to 20, change the style. And then the second EMA is going to be a 50 period EMA as well. Change the style and then go to inputs and change that to 50. Now we have 2 exponential moving averages that tell us one thing mainly. They tell us the shorter term trend, that's the shorter period EMA, versus the longer term trend, the 50 period EMA. Now we want to implement Williams fractals. So come up to your technical indicators once more and type in Williams. Williams fractal will be there. Put it on the chart and you can see some arrows appearing now. We want to keep the Williams fractals in the way that it comes as normal. So set periods to 2 and then change the style. I personally change this quite a lot. Initially, the down fractals are in red. I actually want to change this to green, and you'll find out why in a second. When it comes to the up fractal, I want to change this to red. And now we have green and red telling us exactly what's happening. I also want to change the triangle. Instead of a triangle down, I want to change this to a triangle up. The reason being is that this fractal in particular, even though it is a down fractal, it is actually something we're using to go long. And so it's easier to see an up triangle because we associate an up triangle with going long, or essentially betting on the price going up. And even though the up fractal is higher, we actually want to change this to down instead of up, because that would mean we would actually run out of our move and we don't want to buy in there. So red down triangle for the up fractal and a green up triangle for the down fractal. It's reversed and mirrored, but once you have them there, it becomes a lot simpler. We can see now this is a simple way of looking at it, because what we can see is that when we get a fractal indicator showing green and up, that is a potential long entry for us. Now what we want to do is find an area in the chart where a candlestick and a fractal is printed in between the 20 and the 50 period EMA. When the 20 is above the 50, this is known as a bullish move, because what it's telling us is that the shorter term trend is above the longer term trend. And so the short term trend is to the upside in quite a strong bullish fashion. The Williams fractal is the indicator that we will use. Like I said, it has to be printed right in between the 20 and the 50 period. So you can see that right here. This fractal though doesn't often occur until a couple of candlesticks have been printed afterwards. I'm not going to explain exactly how Williams fractals works, but essentially you're going to have to wait a couple of candlesticks for an indicator to be printed. And so you won't be able to get in right away. This is one of the downsides of Williams fractals. However, it does give quite a strong signal overall. So we wait for the signal to be printed a couple of candlesticks afterwards, which would be right here. How much risk do you want to take? I would say around 0.75% is okay for me. We also see some support here in the chart, so I would say that level is okay when it comes to your reward ratio. Unlike using the stochastic, we have to set our own risk, reward, and take profit. So once more, I would say anywhere around 1.5 times would be sufficient there for a quick in and out trade. You can see that on this occasion, that would have worked out for us. We would have got out and we would have had plenty of room to get out up here. Actually, the price went a little bit higher, but that trade would have been successful for us. Something to note very strongly with Williams fractals is that you have to wait for this Williams fractal to print in between the 20 and the 50. If you get a fractal that prints above like this, we wouldn't go in and wait for the second fractal to print. Also with fractals, it doesn't work every time. As like you can see here, we would have gone long right now, and that would have been a move to the downside. So that would not have worked out for us. Right down here, as you can see, there are many fractals being printed, but it is not above the 20 period moving average. So we don't go long here, and that strategy will save us from many losses. The 20 period is actually moving down right now, and so you don't want to get in around this level. But as we come up, you can see this one is just printed in between. And so this actually is a long position, and we could have got in around this level. We don't go in now. This again is 50-50. Probably you can go long. This again is not, but you can see the big move to the upside. So we can enter a long position on the third candlestick. Set your stop loss where you're comfortable, again around 0.75%, 0.7, 0.6%, something like that. And then to the upside, 1.5 or 1.25 times your risk. This trade would have worked out after a couple of ups and downs with this big upside move right here, and then plenty of opportunity to get out. When it comes to scalping then, scalping is notoriously difficult to pull off, essentially because of the speed of the market. It requires time, speed, and skill. Although an upside is that you can really come to the market at any period of the day for a couple of hours and actually get your trades in. There are frequent trading opportunities, which is why so many people like scalping. Something to note though is that it requires a broker with the lowest fees because you are trading often in and out, and that will eat away at your profits. Do go over to moneyzg.co/tools to find the best brokers, exchanges, deals and offers if you want to go ahead and start scalping. Also subscribe to the channel if you want daily helpful crypto content, and I'll see you in the next one.